Hey everyone, and welcome back to another video for today. So, in 2 weeks' time, Google Alphabet will report its quarterly figures Wednesday after the market closes October 29th. At the time of recording, Google is at $244. Stock was up 3.2% on the day. Year to date, the stock is up 28.8%, and over the past 6 months, it's up 53.3%. It's a company worth around $3 trillion. So, let's talk about what you need to know about this stock and this company before it reports its next quarterly figures. We're going to go over a couple of analyst estimates and a couple of, company-specific data as well, and then what I expect from the company. So without further ado, hit all the buttons, you know what to do. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And of course, a special thanks to fiscal.ai for sponsoring this video. If you use my link that will be in the description and in the pinned comment, you'll get 15% off. New users will get Fiscal Pro for 2 weeks for free. Every chart that you're going to see during this video comes from this platform. Of course, as you know, during the earnings season, this platform does update the figures extremely rapidly. And then, of course, you get the transcript as well. So after the earnings call, you will get the transcript. And if you don't want to read all of it, you can just click here, AI summary, and you'll get everything you need. And then you can even ask some specific questions. Now, in this video, we are going to look at the analyst estimates for the upcoming quarter. We'll start off with revenue. Actually, before we do that, these were my Google catalysts 3 months ago. So the earnings report, I said that this is going to change the narrative basically. So we have cloud growth, Gemini usage, search query growth, and then eventually this will lead to the narrative shift. And of course, we also had, the fact that they don't have to sell out of Google Chrome, nor do they have to do that for Android. So yeah, all of them did happen. Now going forward, I do think that this right here, cloud growth, is going to be, again, the same catalyst there. We are going to see cloud growth continue to outpace the industry. I do think that Google Cloud, right, despite its growth right now, which has been 31.7% last quarter, is going to continue to grow quite rapidly. It's going to continue to grow quite rapidly, and it's becoming more and more profitable, as you can see right here. If we look at Google Cloud margin-wise, it was last quarter at 20.7%. Previously, we're in the 17%. We know that AWS is much higher. We know that Azure is higher as well. But I do think that here, Google Cloud is not only going to become a bigger business revenue-wise, right? If you look at over the last 12 months, that's basically a $50 billion business, growing 31% with 20.7% operating margin. I would expect that to continue to go up. This is not a story that comes to an end, despite, yes, AWS and Azure being extremely big and they've been growing for a long, long time. Google and Google Cloud is, of course, the smallest of the three. But I'd be surprised if this isn't a business that will generate $100 billion in revenue 3 years from now with quite nice margins. And of course, with that said, operating margin for that business will continue to go up. Well, with that said, you can see that even right now, we look at search as a percent of the overall business, right? The amount of revenue that they generate, 56.1%. It peaked back here, right? June 2022, 58.1%. We're not 56.1%. If we look at the rest of the business, of course, sits here at 43.4%. You might say, where's the rest? Well, I didn't include the other bets and whatnot, the very, very small percentage there that's missing. But this is a trend that I do think we are going to see continue. I do think that we're going to continue to see that blue line make its way up and that orange line make its way down. Search is still going to be a huge part of this business, of course. But if we can get the rest of the business to balance things out a little bit, I do think that the fears of, Google search being destroyed by this new AI search era that we're going into, I do think that this will eliminate, let's say, those fears, at least a little bit. Now, let's see what the analysts expect Google to report. So the consensus number for revenue is $99.86 billion. $99.86 billion for the quarter. And of course, the quarter after that, it's going to be in the $108 billion. Q4 is, of course, a huge, huge quarter for most of these companies. Then if we look at earnings per share is expected to be $2.32. Actually look at the price targets right now. Of course, that has gone up. Back here in September, probably early September, that was $211. We are now sitting at around $245, which is close to where we're at right now. Again, to me, we're not even expensive when we look at Google. Stock has performed very well, but we're not expensive. Trading PE wise, 26.2 times, forward PE, 24.7 times. Yes, if you look at price to free cash flow, that is quite high. Huge increases in capex here does decrease the cash flows of this business. Although if we go and look here at free cash flow estimate for the quarter, we see that it sees a nice rebound. Of course, over the last 2-3 quarters, I'd say 2 quarters especially, free cash flow has been a bit all over the place. But for the upcoming quarter, market is expecting $17.66 billion in free cash flow. Yes, there will come a time where capex will not increase as fast as it did over the last 2 years. And so you are going to see free cash flow, in my opinion, continue to go up accordingly. I also do think that Google, being, of course, one of the few that have a very, very good alternative to NVIDIA GPUs, that will play to their benefit for many, many years to come. Of course, I'm talking here about the Google TPUs. I think that's going to be one of the best winning formulas going forward. And of course, as you know, Google, for the last couple of quarters, actually, of the last 12 months period, that is, if we look at net income, well, it generates more net income than Apple, and it generates more net income than a Microsoft. Well, as you know, Apple's net income has actually been either flat or did decline since it peaked back in Q1 2022. Microsoft did increase over the last couple of years, but Google is the most profitable company. Now, during the last analyst conference, we talked about this before, but since this is a nice recap before the earnings season starts, this happened at the start of September. Annual revenue run rate for the cloud business is, of course, $50 billion. Remaining performance obligation stands at $106 billion, growing faster than revenue. Over 50% of the backlog is expected to convert to revenue within the next 2 years. That's a huge amount of dollars, of course. Achieved 28% sequential quarter-over-quarter growth in new customer wins during the first half of the year. 65% of existing customers are actively utilizing Google Cloud's AI tools. Customers using AI products typically engage with 1.5 times more Google Cloud products. They've processed over $1.5 billion in threat hunts using Gemini. They observed 27 times increase in data volume processed in BigQuery with Gemini. Customer service technology saw 10 times growth in chat and voice interactions, and it handles approximately 5 billion commerce transactions via its commerce agents. And of course, we also heard about the PayPal and Google Cloud AI announcement a couple of weeks ago. Talking about Gemini, if we look at the month-over-month growth of the leading Gen AI website for the month of September over the month of August, Gemini, huge jump here, 46.2%. ChatGPT almost a 1% jump, DeepSeek 4.3%, Grok.com declined 7.4%, Claude up 5%, Perplexity up 14.3%, and Copilot Microsoft up 3.7%. Back in August, if we do the month-over-month comparison, August, July, here as well, you've seen Gemini grow 3.3%, which is of course a bit more than ChatGPT, but the big jump back then was Claude up 18.6%, and then Perplexity 5.4%, and here as well, Grok did decline 5.2%. That's not all. Google Gemini in September, over 1 billion visits, first time surpassing actually the 1 billion visit milestone, ninth consecutive month of growth, up 285% year over year, 46.2% increase month over month. Yes, of course, you might say, yeah, but that's because of the release of Nano Banana. Yeah, maybe, but so what? So what? ChatGPT has also seen a huge amount of increases every time there's a new trend going on for image generation. So it's a good thing. It's actually a very, very good thing. Then if we look at, let me actually remove myself right here. If we look at the top 10 most visited websites, well, Google and YouTube still dominate the number 1 and number 2 spots. Yes, month over month traffic did come down a little bit. The only one that went up is here, ChatGPT, up almost 1%. Last couple of things here. If we look at the generative AI traffic share, this is Gemini, the red one right here. Went from around 6.3, 6.5% share last year to 13 point something percent this year. While ChatGPT, of course, lost some market share, but when you were the dominant player a year ago, it is normal to lose share. And yes, Gemini here is taking that share. We've also had the Gemini at Work event a week ago, and Sundar shared this. They are now processing 1.3 quadrillion monthly tokens across all of their surfaces. That's up 30% since July. It's insane. 1.3 quadrillion monthly tokens were processed across their surfaces, up 30% since July. It's insane. It's insane. So all in all, what am I expecting from Google to report over the next 2 weeks? Well, in 2 weeks, that is. I expect them to report yet another good quarter of Google search, good quarter of YouTube, very, very good quarter of Google Cloud. I do expect those margins to go up a little bit, still be in the 20%, of course, but to go up a little bit more. Google subscriptions, platforms, and devices revenue also steadily increasing year over year. If you look at the year over year comparisons, it is a bit more difficult, right? September of last year was a pretty good quarter there. But again, this is a business that generates around $44 billion a year right now. Yes, subscription platforms and devices is a business that generates around $44 billion for this company. Cloud is a $50 billion business. YouTube is around also a $40 billion business. It's insane, right? If you take all of these businesses under the Google or Alphabet umbrella and you put a price to sales metric that you would put on another publicly traded company, right? The subscription side, what's the multiple that you're putting on that? The YouTube side, are you putting a 10x multiple on that? Are you putting a 15x multiple on that, right? Because if this is a $40 billion business, a 10x, $400 billion business, right? It's quite insane when you think about it. And then you look at the Google Cloud business, $50 billion in revenue, growing quite rapidly, becoming more and more profitable. You could put a 20x on it. And that's $1 trillion already. So yeah, I do still think that yes, even with this V-shaped type recovery that we've had for good reason, I do still think that Google is an incredible buy in this market. It wouldn't be the craziest thing to see Google at the number 2 spot market cap wise over the next 12 months actually. Nvidia will probably still stay number 1 if they continue to put out the huge growth that we've seen basically over the last couple of quarters. But Google, I do not see why they cannot be the next $4 trillion company out there. They've got all the ingredients, they've got all the businesses, they're doing right now everything that they should be doing, right? We've come a very, very long way since the botched BART presentation all those years, well, not all those years ago, all those quarters ago, right? It seems like we've been in this for many, many years, but no, 3 years ago, ChatGPT came out. So it's still quite new, I would say. So yeah, to answer the question of this video is yes, the question is, if you like it, why not? It's not that expensive actually. really not that expensive. And that's the thing, that's the message that I've had for quite a while is the people that scream, oh, it's a bubble, it's a bubble. It's either people that don't understand what's going on right now, people that completely miss the rally, or people that just don't look at these companies and think that, oh, everything is quantum, right? Everything is trading at 300 times sales or whatnot. But no, you have here a Google that is trading at 26 times earnings. It's incredible. It's incredible. And so, and even an Nvidia, right? For a company that big to be growing that quickly still and not have a PE like a Costco or a Walmart of 40 or 50 times. Yes, it is quite incredible. And again, it shows that no, we are nowhere near the dot-com bubble, in my opinion, especially not with these names, And so all in all, that's about it for me in this video. Hope you enjoy it. Do share your expectations down in the comment section below. Do check out fiscal.ai. Link is down in the description and in the pinned comment. You'll get 15% off. We'll see each other in the next one. Bye-bye.